Bruce here with Targeted Wealth Creation. I wanted to get this out really early. I wanted to help any of you who are nervous. Obviously, there was a big sell-off in the markets, hit our CONY, hit our MSTY, hit YBIT. If you own that one, I'll do that video a little later. So I wanted to just give you guys some nuggets, some wisdom here, I think, to how you handle these kind of situations. So let's start with just what's the sentiment in the market, what kind of news can be driving things. So one of the things that pops up before I get into the details, I'd mentioned it yesterday, Bitcoin had big news that Hong Kong and Asia started an ETF. Actually, there were 3 different ETFs, and how they were going to have a fantastic day and a lot of money was going to flow in. Well, first off, money did flow in, but I read a stat that said Hong Kong is 1/68th of the US market. Remember, Hong Kong is its own financial market, and the Chinese government is saying to the mainland Chinese population, you can't buy Bitcoin. Now, I'm sure some of the people have managed to figure out how to do that, but I just wanted to say it's a sell the news kind of event, because when you really looked at it, even the Hong Kong people were a little disappointed in the flows, but they were quick to point out, look, our market is 1/68th the size. So thought I'd start with that nugget. The second one is there still is some sell-off taking place in GBTC, right? GBTC was like an ETN that ProShares had. In January, they converted it officially to an ETF, so it didn't have to deal, as I understand, with the K1. But regardless, there's 2 issues outstanding. But the number one issue, contrary to popular belief, is the fee. They're charging like 1.5%. A lot of the Bitcoin ETFs have waived their fees. So they're charging 0%. Yeah, I know, like YBTC, but that's different. It's a, based on BITO, as opposed to a pure BTC fund. So anyway, the Bitcoin ETFs, they're still selling from Genesis's bankruptcy and from FTX, right? The FTX was the bigger, with Sam Brinkman and so forth, so there were a lot. The third thing that I think is affecting the markets really comes down to the Fed tomorrow. People are very nervous. When you see earnings from McDonald's go down, and when you see earnings from Starbucks go down, it really starts to say that the consumer is tightening up, right? And it's no doubt that we're encountering stagflation, where we have this stagnant inflationary environment, where things have all gone up. It's obvious for the average consumer to see that. But we don't see, corresponding raises. We see layoffs in the corporate world. So just be aware of that. It's part of why I felt a little bearish in general about the high tech and the FOMO around some of the high tech stocks. But that can also drag down Bitcoin, it can drag down crypto, it can drag down gold, it can drag down agriculture, commodities, a lot of the things that I tend to favor. So I just wanted to get that out. The second thing is try to save dry powder. So when you go in one of these funds, Bitcoin has gone up tremendously. If you look at MSTR, if you look at Coinbase, these things have gone up 6, 7, 8 times, right? So when we pull back, even though it's painful and we don't want it and we're waiting all tense, sometimes it happens. You don't get something that can go up 5 or 6 times that doesn't pull back 50% from, or 35% from one of the heights. So expect it. You know, if you've got a very conservative stock or security that trades between 21 and 22 for 3 years, yeah, that's different. But who's going to pay you 70 or 80% annual yield, right? I'm not saying that you have to accept poor performance, right? And that's my big thing. Don't chase yield if you think that that underlying security is just absolutely going to crash and it has a bearish outlook. Okay, I expect them to pull back like they are, and they can pull back significantly more. It's possible. But where is my opinion in 3 months, 6 months, 9 months, 12 months out? I'm very bullish, okay? So I can live with that scenario. All right, so enough. I wanted to just cover some news, some things that are going on, and just try and, you know, paint some positivity on the situation. No one likes to see their portfolio down. All right, let's jump in to coin and CONY. Whoops, I'm not getting the right sheet. For some reason, I'm still... All right, well, as long as it shows on the screen, that's the main key. All right, I can work within this. I use OBS for my screen sharing. Here we go. I'm all right with this now. So what did we have yesterday? We had a big pullback after having a 7.68% pullback on Monday. On Tuesday, we pulled back another 6.52. Now we continue to outperform, but that's a small, consequence, right? Better than pulling back more, I guess. So we pulled back 5.36 yesterday compared to 7.68. And today we pulled back 5.91 compared to 6.52. So almost the same. All right. The good news is people are buying these sales, right? Just like people go to the department store, you go to Amazon, you order. When they have a sale, a Black Friday, more people pile in. So that's happening. So they're putting more trades on. They're buying more synthetics. They're selling more naked calls. So let's take a look at what transpired there. Let me bring my sheet over. So on coin, which we do the buying and selling on, there were 3 trades. This first pair is a buy call, sell short the put, right? We're still on a 260 strike. Once they pick a strike, they pretty much stick with that strike. Once in a while, with maybe a week to go, if they haven't rolled it, they'll open an additional strike, and then that'll be out 4 to 5 weeks. But typically, they stay in one. All right, so let's take a look at what that looks like. We'll go to our 260. And we're quite a ways below that now, right, guys? We're 203.93. Right, we're 21.57%, almost 22% below, but we've got 13 trading days, 2 full weeks of trading plus 3 more days this week to get to 260. We don't really want to be below 260. So not worried about that. I'd like to see it fixed because we're now up to 107 million loss. On paper, okay, it won't affect our payout now. Mentally, it'll affect whether they give us an extra little bit of money or not. So I'd like to see that come up before Friday morning's declaration. But we sold 285, okay, but by being so low now, right, so far below the 260, we're able to put 1.5 million more in the kitty, right? So we spent 131,000 to buy 260 calls. They're so far out of the money, right? Only cost $4, right? Those will go to zero unless you're at 260 come 5/17, right? So we went from having 12.4 million in the kitty to 13.9. So we added about 1.5. But when we redid our numbers down here, we went from 78 million to 107 million paper loss. That's what would happen if we had to close it out. Whoops, I need, oh, that's, yeah, I need to update this guy. So that should help us a little and make that 16. Okay, so that should help when we get over to our final tab. Let's take a look at April tab and see what we did with that call. So they always take a matching call. In this case, we did 285 contracts, but remember, this is a synthetic strike price. We always, on the weekly, and there's only 3 trading days, we sold short, right? We sold without owning the underlying, a 240 call. Now, granted, we're at 203. So we got $3.25. So let's take a look at what that looks like, right? Here it is, 285 contracts, $3.25, 240 strike. Look at how far away we still are with 3 trading days, right? So we collected 92,000, and that put us up to a running total of 31 million since this month has started, since after the declaration and the pay date, right? So this is like April 4 forward. And there was a flow into the fund with shares. So you see that in the 2.7 million change in cash. And I'll show you that over in my holdings. So let's go there. Let's look at the weekly for a summary. So we put this new call on. This is where we set right now, right? We had all of these, and then we came in here and we put this 240 call on, and we're 17% out of the money. Look at how far out of the money we are on all these other calls, right? The 255s and 250. This is the big granddaddy, right? And these other 2, I should just roll up that number into 1. It's like 18,000 and something, 600, 700. So we're 25% out of the money. We would have to, we don't start losing till any of these until we get above 255. So we certainly want to keep all that cash, guys. Let's look at it. How much cash is it? Right, whoops, I opened MSTY. That's not what I want to do. I want to stay on CONY, and I want to go to the April tab. Okay, so here's all the money we've collected. It's 10 million to 10.4 to 10.6. So we have about 10,700,000 collected, right? So that counts, that shows in our payment tab, but we don't want to lose that, and the odds are pretty good that we won't. Now, what I would say is I really would like to see us at the week get up to at least 240. That wouldn't cost us a penny. Let's get from 200, let's get back to 230, let's get to 240. Now remember, they have earnings on 5/2 after the market. So that's going to play. I've mentioned it this week. We'll take a look at that when I get to the payments. So here's the updated chart. You know, we're down here. We're still in the bull flag formation. I also went back to where I think major support is. I drew the line a hair low, so should be setting around 185. But 180, 185, if we continue down, should be big support, right? Beyond just this lower parallel line. But again, let's see, BTC is hanging around 60. It really needs to confirm a closing below 60, and that opens up 52. So percentage-wise, it's about the same. The difference is Coinbase will react to its earnings on 5/2. So there's a lot to be said what happens just on their earnings. All right. I'm not going to do a whole lot with holdings. There's a couple things. So 50,000 shares were added. All right. Not a huge amount, from 17.5 to 17,550. So a small percentage. But look at this, what I was saying. We continue to sell off, right? We keep dropping. So our liability is now 107 million. So that sets a mental fear when they go to pay out the distribution. But let's see how that, and I'll explain that to you. So I don't need to go through all this other stuff. You know it. All right, let's go over to payments. That's the key. So we're setting here. Let me make sure these are all up to date. 1629. That one I think is right. Yep, 29 is the bottom number. What about the synthetic? 16, yeah, that'll work. Okay, so we're okay in collecting everything. Let's go through it again. So the good news with coin, again, it has earnings. So they got $1.81. There should be no problem, minimum, that they pay the $1.81. Why? Why would they only pay 2/3 like in Misty or possibly that number? Because they also are making money in their synthetic. Now they have 107 liability, 107 million, but what they've actually been paid is 24 million in synthetic. Okay, this, if we were to fly up in the synthetic, we could lose some of that 10 million, but that's not going to happen. Okay, so 181 is for sure. They could go in over here and pay $1 of this, right? It's just, I think what could trigger that would be a good earnings, or we just start moving up, right? If we move back up to 220, 230 on coin going into the week, remember, they're going to meet Thursday afternoon, Thursday evening after the market, which coin would have reported, and they're going to determine the payouts for all, 21 funds, 19 single stock funds. So when they do that, they will be influenced by coin's earnings, right? So they may say, oh, they had good earnings, it's going to move up. It's not going to change how much money is in the bank here, but we could feel good that coin's going to fly tomorrow on Friday and thus start moving in the 5/17 date and lowering this. So we're going to give $1.50 of this. And then we would get a $3.30 payment. So you see the psychology that could play in here. Okay. Otherwise, I would say we got a chance at $2 or $2.80, right? It just depends on how much of this they want to pay out, because we didn't use everything last month, right? But here's a case where they had $1.57 in the kitty that they earned in short call. But look at this. They had, back in January, they took a hit here of 332. So they thought, well, we're not even going to pay all this. We paid $1.07 out of $1.57. They did the 2/3 game, right? So that's why I used that lower number, right? And that number, gets you, but you don't have to do 2/3 here, because they're not losing on the synthetic, even though I have a liability on the paper. All right, let's move on to the next one. I covered that enough. So I know that's a big range. I'll keep it, but earnings is really going to determine that. I think we should feel good that we're going to get $2. All right. So let's get into Misty. So on Misty, look at the size of these. So obviously MicroStrategy on Tuesday reacted to their poor earnings. And again, though their earnings are pretty minuscule for the valuation of their company, is because their treasury is in BTC and it's just gone up so much money in value, right? They don't store it in treasuries or anything. They literally put it in Bitcoin. So when Bitcoin goes up 4 or 6 times, they become a very wealthy company, right? So when it goes down a little bit and then they report their earnings and they're, 30 million instead of, 40 million, people get nervous, but it's minuscule compared to their company's worth. Okay, so 17.63 all the way down to 1065. We only went down 14, right? So we're lagging, which is good in the down environment, and when it goes up, we've been beating it, right? Now, if it turns and runs up 25%, we won't run up 25%, although we're still in good shape with the weeklies because we're so far off. Okay, so what did they do? Here's the 3 weeklies, or sorry, here's the 3 trades. They had a large number of shares come in, right? But again, they're a small amount of shares. So they had 10, almost 11% new shares. What are people doing? They're buying it on sale. When that money comes in, they have to put transactions in place. So they did on a synthetic, they did a buy call, sell, short the put. What do they do it at? They're 1150. Well, guess what? For the first time, they made money doing this, right? They'd been ahead of 1150. We're now below 1150, right? And then they did just a call at 1180. So let's go take a look at that. So here, as we scroll over, we see it on the call, the naked call. Here's everything we've done through yesterday. Here's today. We sold at 1180, 110. We collected 16.6, $16.60. So we got 182,000 added to our kitty, right? We went from 9 million to 9.2 million in our piggy bank. Our share count, I track them in this spreadsheet. I don't in CONY. I do it in a different place. So we added 325,000 shares, right? So that's more than 10%, just a hair over 10%. So what did that do for us? That moved our cash up 10.7 million, and then we used that cash, right? All right, so we'll talk about that. This adds, by the way, all of these calls, and I'll show you on the weekly, this adds up to about 2.45 million. So that's what we have at stake that we want to keep. Well, these are way out of the money, right? It's only this 1180 that's at risk, and that's only 182 out of 2,000,004, right? So very slim chance there's any issues. So let's take a look at that. So here's all of them, right? So we got 2.4 million to keep. We've been paid. You're going to see it in the payments, but we want to keep it. So the only one is at stake is the 1180, and it's 110 out of 900, call it, right? So it's like, 12%. So not a big deal. So, but our earnings is really going to drive everything. I didn't update the chart, but you can see it's at about the halfway point, right? It's going to be a little below the halfway point. So we're sitting here. I looked at the volume. The volume isn't significant at all. So we're still, it's right up here at the line, but if you get 3 million, 4 million, and it continues down, then it's dropping. But I find a lot of support, right? If I were to draw a parallel line on this guy, the support really comes into play at the 1,000. And there's some Fibonacci numbers for retracement percentages and so forth. We're real close right now where we are at, I believe, the 50% retracement, because you're talking about 500 to 1800. So you're talking 1300, and then a pullback of 650 from, almost 2000. So yeah, and 61.8 is a common Fibonacci number. But I feel pretty good. But don't think we couldn't go down here. You can even have a fake breakout, right? You can run down below the line intraday and close back above it, right? So that doesn't really count. What they count, a breakdown, is when you close and stay below. So all of a sudden resistance becomes support trying to get through it. So we don't really want that scenario. But ultimately, between their earnings and what Bitcoin does, those are the two most influential situations. Let's go. I don't think I can do a lot here for you. So we're selling at 5-cent premium to the NAV. Here's the 10.85%, right? Big amount of shares, so people are buying it on sale. Now, just in a small sense, we don't have the problem that CONY has. We have other problems. But we went from having a 13 million profit to an 8 million to a 10 million, and now we're back to a 7 million loss. Okay, So getting really slammed down for the first time, we're losing on this synthetic, which I would have thought was pretty hard to do. All right, but 7 million is nothing to make up on that. Let's look at our payment tabs. This is everything, guys. Okay, we got this big loss on the books. We keep making a little bit of short call income, right? So this is still the loss. We still have total loss of $6.49 altogether. Okay. Which is this 23 million. We only had 6 million that we carried over from last time. That would have been another $2 payment because look at our share count. You know, we were paid $4. Everybody was screaming for $6 because they had the cash. And they did. But they saved that 6 million. Well, that 6 million got chewed up pretty fast here. Okay. So some people could say, well, they'll pay us $258. They could, but they may not, right? I believe they're going to be somewhere in here. They're going to take that 2/3 rule, and maybe to the upside is $2.21, $2.20. So I think they want to be in this area, especially now that we've turned negative on the synthetic. We now have this new synthetic. So again, if that starts to come back up, right, then we have a chance for a little bit more money. So would I be totally shocked if they paid $1.70 or $1.80? No, I wouldn't, right? But if we start recovering and we get back in Mr. back to 1,200, 1,300, something like that, then we have a positive going forward in the synthetic, right? We don't have the loss on the books. All right, I think that does it. Again, I'm not a financial advisor. This is not financial advice. Hang in there, guys. Don't get too scared, okay? Just try to think it through. If you have cash on the table and you see it pull back further, don't be afraid to buy some. If you have some and you're confident in 3 to 6 months going forward and Coinbase, okay, and the underlying Bitcoin and its impact, then buy some more, okay? But just don't put it all in that you can't sleep at night. I know the feeling. I did that earlier in my investing career, and I learned a lot from it. Okay, guys, see ya.